हेलो एवरीवन एंड वेलकम टू योर वेरी ओन चैनल blinkX। दोस्तों आज हमारा टॉपिक है करेंसी एंड कमोडिटी आउटलुक विद द वन एंड ओनली मिस्टर प्रणव मेर। He is the Vice President of Currency and Commodity Research at JM Financial Services. As usual, I request you all to share this video with your friends and most importantly, get in the comments with your questions and get them answered by an expert जो आज हमारे साथ यहाँ पे live है। Make sure to subscribe to the channel so आपसे कोई अपडेट्स मिस ना हो। तो चलिए सेशन शुरू करते हैं। प्रणव, द फ्लोर इज योर्स।
Yeah. Hi, good evening, everyone. Just a small disclosure before starting this presentation. So we are SEBI certified research analyst having the NISM certification from the NISM on research analyst. Also, the recommendations, on commodity and currency, I do not hold any personal positions in it. So last month when we had done this, the currency and the outlook on the commodity and currency, we had covered most of all the commodities that are traded on MCX, the currencies as well, or like the USD INR, Euro INR. So prices have moved on from those levels. We have seen a strong rally coming in the bullion space. Gold has hit an all-time high of around 66,500. In the international market, prices have breached past $2,200, and the cues have been followed by silver as well. Crude prices are still witnessing a sideways consolidative momentum, although we had seen a good rally a couple of weeks back, but now they are gone into a very much sideways. The bias, although still remains positive. Currency, Indian rupee has appreciated to close to 80 levels from where again it has been started. Today we again saw a recovery from those levels. JPY INR has gone good recovery from around 55 levels. So what we are going to look into this session ahead, we are going to look at the daily charts along with the moving averages for commodity and currency. Also, we will look at the weekly chart setups for a breakout or for a potential reversal in the trend in both commodity and currency segment. So what are the indicators that we are going to cover in the charts? We are in the daily chart, we are we'll be covering the moving averages as well as RSI, that is the relative strength index. Now, so what does the moving averages gives an indication? If prices are trading above all the long-term moving averages, it is an indication by the trend is positive. If prices are below all its moving averages, it is an indication that the trend is negative. But what happens when prices get stuck between its long-term moving averages? For example, if I tell you if prices are stuck between 50 and 100-day moving average, it means there is a sideways pattern. We will get a breakout on the either side, either upside or on the downside. But then it depends. Till prices are not stuck going either above or below its long-term moving average, it is stuck between that moving average. It is called a period of consolidation, sideways momentum we see. Next is rule of RSI. So what does RSI indicates? RSI is the relative strength index of that particular commodity or currency. RSI above 70, it generally fluctuates between 30 to 70. If RSI goes above 70, it is an indication that prices are now in the overbought region. The rally is in the overbought region. There is a possibility of a small correction. But that does not mean that if RSI goes above 70, we should initiate a sell position because it has gone into the overbought region. There is a possibility RSI may go above 80, 90 as well. So in a period of between RSI between 70 to 80, it is some slowness, some sideways momentum we see. But if RSI goes above 80, there is a possibility we may see some aggressive buying also. Prices may over rally also. Similarly, so what is an indication of that now RSI, now correction will come. The indication is if RSI from 70, after going above 70, if it comes back below 70, that is an indication to sell as per RSI. Similarly, if RSI goes below 30, it is means that the prices are going in the oversold region. And if it falls below 20, we may see more selling coming, going into that particular script or that particular commodity or currency. A reversal indication is if RSI moves above 30 from below, from after going below 30 to 28, 29, 25, then again moves above 30, that is an indication of going long, adding, or we can say buying position in the particular script. So this basic rule will follow in all the technical charts that we go in, look ahead. So this is the gold daily chart. Last time when we were discussing the gold, it was hovering around 61,400, 500 levels. Those were the levels. We were mentioning that the trend still remains positive in gold. Look what has been happening in RSI. RSI, the red line on the upside is at 70. The lower line is at 50. So RSI is still in the 70 region. If this RSI goes below 70 again, it would be a sign of correction. Otherwise, as per the charts, the trend is still looking positive in gold. The immediate support that we need to watch out is the two candle support, the two bullish candle. So this is the first bullish candle. This is the second. Second one comes at around 65,180 levels. So that is the strong support that we are looking for in gold. If this support is breached, then there is a possibility we may see more correction in gold prices in the coming trading sessions. Otherwise, there is a possibility of some sideways, some consolidation in gold, and then prices can again take a reversal and move up. Also, if you see a breakout in gold, see, we have drawn this chart, this trend line. It is a sideways consolidative move from 64,000. It went down towards 61. Then it again moved up. So a breakout of this consolidation has also triggered a rally in gold prices. Again, since prices, why trend is positive? Look at the chart. When prices were in between their moving average, we saw sideways consolidation. Once it gave us a breakout above that, we have seen a strong rally coming in the gold prices. See, this is the weekly chart, the summary of a consolidation range from 64 to 61. Then it again moved up, again came down. It broke out of this consolidation range, and then we have seen a big rally in the gold prices. Also, now why prices are likely to see some consolidation? Look at the weekly RSI. It is just moved above 70 and it has come back to 67. So that is why an indication that we are seeing some profit taking in gold prices. A break below 65,180, there is a possibility of a more correction towards 64,800, 64,500 levels also. But till that support at 64,180 is not breached, we may see some sideways consolidative move in gold prices. Next, we will look at silver daily chart. Prices are above all its moving averages. The trend is still looking on the positive side. Yesterday, we had seen a big correction, but again, today prices are slowly and steadily moving higher, an indication that the trend is still positive in silver. Where the RSI is holding at 63, so it is above above 50 is an indication that the bias is on the positive side in silver, not yet gone towards 70. So it has a few more chance of prices of going up. So what are the support levels that we'll be looking in silver? Strong support at 73,500 and next support at 72,900. Till these two supports are not breached, we maintain a positive view in silver and expect prices to again start moving up close to 76,500 and possible targets towards 77,000 levels as well. So here what we can do is look to buy in a staggered manner. Yes, maintain very strict stop loss below 70 to 900. If that is breached, then there is a possibility we may again see a dip in silver prices. So this is the daily indicator. What does the weekly indicator shows us? RSI is above 50. It is also above its moving average. an indication that the bias is on the positive side. The charts have reversed, prices have reversed from around 68,000, which is the support line. This is the second, yes, last week was the second consecutive week of positive. This week again prices have breached those levels, an indication that the bias remains positive. It can go up close to our given targets of 76,500, 77,000 levels. Next is copper. Again, we have seen a strong rally in copper prices after it moved above all its moving average. Today, prices have hit RSI has again come close to 70 levels, an indication that there is a possibility the up move could see some correction. If RSI is unable to cross 70, there is a possibility of a small correction in copper prices. But at current levels, that bias is looking on the positive side. Since prices have rallied so much, the trend is still positive. We will wait for a small dip if anybody wants to go on long on a positional basis. So this dips should be taken as a buying opportunity in copper price because the support level is quite low, comes at around 730, 732, and prices are already at 744. So dips should be taken as a good buying level in copper. Another indication of a positive trend in copper is a breakout above this level. Last time we had mentioned a resistance level of 734 and 738 in our last webinar. Prices were unable to cross that level. This time it has crossed those resistances 734, 738. Another indication that the trend is positive. Where is RSI placed? Very well above 50. So 70 is yet still far away. It is trading around 55 level. So the bias is still on the positive side for copper. Next is zinc. A strong rally that we have pushed the prices above all its moving averages, long-term moving averages. The trend bias is looking positive. If you see the chart formation over the past, 8 to 10 trading weeks, it is the candle formation is higher highs and higher lows. So what will be the support that we will consider for reversal in zinc? 218, which is this candle. If zinc breaks 218, then this uptrend will get negated and there is a possibility of a small correction. Otherwise, prices can continue this up move, take prices towards 228, 232 levels also. So this is the weekly chart of zinc. So last time when we had discussed, the prices had broken this trend line support. It's a long-term trend. Since this is a weekly chart, it is a long-term trend line, scaling over past more than 1 year. So what this indicates, this is a failed breakout that we can say, because prices broke below this trend line, came close to this support around 204, 205, and then again bounced back. So also the chart pattern, weekly chart pattern indicates that the zinc bias momentum is looking on the positive side. But how much upside where should we look into zinc? The resistance for zinc again comes at 233, 234 levels. If you see the chart carefully, see my cursor, previous occasions, prices had come to 233, 233.90, 234. Even it crossed above 234 once, but failed to sustain and have fallen back. So if we consider the bigger range for zinc, it is just confined between 204 to 234 on the higher side. So that is what the zinc movement is. But at current scenario, the bias is looking positive. 218 is the immediate support and the potential upside for zinc looks like 228, 232. Next is lead. Again, as I said, when prices are goes in between their moving average, we see a consolidation. The price momentum gets stopped. So this is last 4 trading days, prices are stuck between their 50-day moving average and the blue is the 200-day moving average. So the momentum is going nowhere. It is just we expect now till the lead prices go below 180 or above 182. Oh, sorry, 183. We don't expect a big move in lead. We could see a consolidation for a period of time. So what the weekly chart indicates? Bias looking on the very well on the positive side. If it is able to cross 182, 183, sustain this level, then there is a possibility it can again start going up close to 189, 192 levels. Support that we will be looking for on the reverse would be around 177.50. So what the RSI for lead is indicating, it is still below 50. So there is little bit on the, it is on the dicey side. If it is unable to cross 50 and starts going down, we may see some correction. But if it goes above 50, it has more chance of prices going up close to 189, 192 levels as well. Next is aluminium. The daily chart prices are trading above all their moving averages. So the trend is looking positive. RSI has just come close to 60, 70. Current RSI is at 62. It has an indication that prices are more room to go higher. What would be a reversal point for aluminium? It would be below 201 or 202. Unless and until that support is not breached, we see aluminum prices again going close to 210, 213 levels in next couple of trading weeks. So this is the weekly chart of aluminum. So what do you see in this chart? There is no trend. It is just a sideways consolidation in in aluminum prices. It comes down close to 194, 190 levels. It breaks down below this, but then again moves within that range. Upside breakout we had seen in the month of last year, January, but then again prices have come down within this range. So if we consider the bigger range for aluminum, it is just between 190 to 215 on the higher side. From current levels, what is happening is the bias is looking on the positive side. We see prices going again close to 212, 215, 210, 213 levels. Support level for reversal would be around 200, 201. Next is oil. A little bit of a correction after the rally that we saw in crude prices. However, the trend has not yet changed. We saw prices falling back in between their moving averages, but it has trying to attempt give us a breakout in crude prices. So if prices are able to cross and sustain above this moving average, we again see this rally continuing. Where is RSI placed? Above 50, it is showing signs of reversal. On previous occasion also, prices RSI had come to 50 and reverse. So this is the strong support that we see in crude prices. So what is the trend in crude? Positive. If we get a good dip, it is a good buying level for crude. Yes, stop loss is necessary. So what has to be the stop loss? 60 to 70 is the stop loss that we advise. If crude is able to break 60 to 70, then we see a reversal in crude prices, and then we see prices dipping close to 6,000, 5,900 levels also. So till 60 to 70 is not breached, bias remains positive. We again see prices going close to 6650, 6800 levels as well, possibly in next 3 to 4 trading weeks. So this is the weekly chart. RSI very well placed above 50. So the bias is looking on the positive side. A little bit of a correction last week. This week's we again saw some correction Monday, but yesterday prices again recovered. Today also they are trading in the positive territory. 60 to 76 is the support, two candle low, two bullish candle low. So that is the support level. Till this support at 60 to 70 is not breached, remain on the buy side. Next is natural gas. Prices are comfortably below all their moving averages. So the trend is negative. We had seen a small rally on the higher side couple of weeks, but prices have again come down. RSI is below 40. So again, that the momentum is looking on the negative side in natural gas. So what are the resistance to watch out for a potential reversal is 151, 152, two bearish candle. If these candles are breached, we again possibly we may see an up move. Otherwise, prices can start, continue their corrective momentum. So what the weekly chart has been indicating, this is the long-term support line that the prices had hit, and it had recovered slightly. So what is the strong support to watch out in natural gas? 132. This is the two candle low. If natural gas is able to break 132, then there is a possibility this corrective momentum will continue towards 120, 115 levels as well. RSI, again, it is comfortably placed below 50, above 30, an indication that the bias could remain on the negative side. Still, because prices, the chart pattern, the prices have breached resistance at 160, we'll advise to trade little cautiously in natural gas and look for a positional sell only if it breaks below 130. Otherwise, it is just a wait and watch. Look for a potential reversal indicator. In reversal indication. Next, we'll move on to currencies. So this is the USD INR. We have seen slowly and steadily the prices have been going down. When we were discussing last time, it was just in a consolidation range, 82.80, 83.10. That was the range that we were discussing. So that because it was trading in between its moving averages, now prices have given us a breakdown. Today, it tried to give us a breakout above its moving average, but it has failed and it is still trading below the same. So what is the level to watch out in, when we are trading USD INR? 82.97 is the 83 is the strong 82.97. In fact, is the strong resistance that we need to watch out. If USD INR is able to cross above 82.97, then it will again go within its start trading between its moving average and trade between 82.85 to 83.20 levels. But till it is unable to sustain above 82.97, we expect prices to take a reversal and can dip close to 82.70, 82.50 levels also. See, this is the weekly chart of USD INR. The trend is very much sideways. It is in a corrective mode. 82.97 is the bearish candle, last week's bearish candle. So till that level is not crossed, we don't expect any big up move. Prices can again take a reversal and dip towards 82.70 and possibly towards 82.40, 82.20 levels as well. Also, if you see this long-term trend line from 80.58 to 81.68, prices have broken that trend line as well. So this is two strong resistances. Only if it is able to cross 82.97 and sustain, we expect upside. Otherwise, the trend bias looks corrective in USD INR. Next is Euro INR. Prices have again reversed. So as per the weekly chart, the bias is looking on the positive side. Support strong holds at around 90, 20 on the downside. If that support is breached, then we expect more correction. Otherwise, the prices are expected to again move up close to 91.50, 92 levels. GBP INR, it is a sideways wedge pattern that the prices have formed on the charts. We need a breakout above 106.70, 106.60, 106.70. If prices are able to give us a breakout this week, and if we see a positive opening next week, then we see a rally in GBP INR towards 108, 110 levels also. But till this level is not breached on the higher side and sustained 106.50, 60, we again expect a dip close to 105, 104 levels. Last, JPY INR. Last time when we were discussing, it was trading around 55, 10 levels. It has potentially reversed from its long-term support line, which comes around 54, 55.05. The bias is looking a little bit on the positive side. What is the first support that we'll be looking is 55.20 and next support at 55. Unless and until these supports are not breached, we don't expect a bigger correction in JPY INR. Prices can see a reverse from current levels. Buying is advised in a staggered manner. Adding on dips is advised for potential target close to 57, 50, 59 levels on the higher side. And yes, we will maintain a very strict stop loss below 55. So this is all on the outlook on commodity and currency, what has been going in the trend, how the RSI has been looking, where the moving averages are placed. So I'll open this forum for Q&A. If you have any questions, any queries, you can ask.
Yes, thank you so much, Pranav. That was very insightful. We have a few questions here. Uh, so first question is, it's an interesting question. If inflation is rising, does it make sense to go long on commodities?
Uh, no, don't only completely look at the fundamentals, because if inflation is rising, it means that the commodity prices have already risen.
Right,
See,
right.
how inflation will go up once commodity prices moves up, then only it will reflect into the data, right?
Ah, right. Yes, yes,
So
yes.
it doesn't mean that you should start buying commodities. But if inflation, yes, it is an indication that commodity prices are rising, but that doesn't mean it will continue to rise. Maybe there may be some supply disruption or a temporary, jerk, and after which it again, starts coming down. So that could again bring the inflation down. So
Right. So,
commodity prices precedes inflation.
so that information is priced in. By the time inflation
Yes,
data come
yes,
out,
yes, yes, yes.
commodities have already priced in the rise. Okay.
Yeah, because the data that comes is of the previous month. When if
Right.
prices have already risen, then it will reflect into the data.
Right. Next question is, like we study the option chain for Nifty, what data should we study for Forex?
You can definitely study the option chain for currencies as well. USD INR options are very liquid. Monthly contract, the weekly contract has good liquidity. It has been doing some fabulous volumes that have been happening in the currency options as well. So yes, you can look the options data for USD INR. Rest other commodities options are little illiquid, so that won't give you a clear idea. Other currencies, sorry, the Euro INR, GBP INR, JPY INR, the options are illiquid. But definitely USD INR, 100%. You can look at the option chain where the put sellers are placed, where is the highest call OI, put OI, which can help us in finding the support resistance levels also. So apart from option chain, there are various economic data that comes in. Sentimentally, if you see the fundamentals in why rupees has been appreciating since everything has been going in the international market, because domestically our fundamentals are very strong compared to the global markets.
Yeah. Okay. Next question is, okay, I think this is a question about your charts. So there are some figures in degrees in your charts. What is that?
Uh, it is that the degree figures and degrees are just the trend line. It is just the 2 degree up move. We see
Okay, okay,
54.73. It is just a 2 degree up move, nothing else.
okay.
A -6 degree downside
I
from
think
90.
I
Yeah,
think we have some
nothing.
technical analysts in the as our viewers, so I think
No
they're
issue. Yeah, yeah, yeah. No problem. No problem.
what is the reason for gold's sudden rally?
See, there are few reasons. One, the big reason for gold was that, when the chairman Jerome Powell, at his testimony last week, he gave a clear indication that, interest rates are likely to come down this year. Although he has not said it will be in May or June or July or August, he has not clarified the timing. But markets is already pricing in rate cuts in the month of June, so that probability has gone up. So after his comments, other Fed officials too have been indicating that they should start cutting the rates, later this year. We had European Central Bank policy meeting last week. ECB officials also indicated that, there is a possibility that they may start cutting the interest rates later this year. Timing nobody has said, but that was enough for the gold bulls to get a jerk on the higher side. Dollar came down, treasury yields came down. Already prices have remained supported by Middle East tensions. So that is another factor positive for the gold price. And since everything was in the positive, we saw a breakout. Gold was consolidating as we saw on this chart. See, although already gold was consolidating in a range, it gave us a breakout above 62,400 and it started a big rally. So it was a rally of more than, I guess, 3,000 points. So how do we calculate that 3,000 points above 62,400? It's 64,000 minus 61,000. A rally of more than 6,000, immediate 6,000 points. So it's some chart-based buying, some speculative buying, definitely we can say. But yes, fundamentals were very much supportive for the gold, in terms of the news flow that has been coming, the economic data that have been coming. If you can see the US data over the past throughout this month so far, most of them have been negative. Most of them have been indicating that the US economy is slowing. This is what the Fed wants. They want their economy to slow down. That will bring the inflation down close to their target of 2%. So everything was on the negative side. Dollar was going down, and we saw this rally in gold.
Right. So it was basically a confluence of a lot of fundamental factors, and that pushed up the price, and then we saw
Yes.
follow-up buying from
Yes,
the
yes,
rest of the market.
definitely. Yes, yes.
Okay. How do commodity FNO work in terms of expiry?
Commodity FNO, see the expiry of the commodity options, the futures. I'll first speak about futures. In futures, some of the commodities are deliverable. So in a delivery-based contract, when you trade like gold, silver, gold mini, gold petal or gold guinea, even the base metals are deliverable. Last 5 trading days. Don't consider the last the 5 days, of that particular expiry. Last 5 trading days, you should avoid trading because the exchange starts marking delivery in a staggered manner. It means randomly exchange may randomly mark the delivery. It is done by machine, not a manual process. So if you are holding a buy position and these are compulsory delivery. So what does compulsory delivery mean? If I am holding a buy position in last 5 trading days, and if the seller has given an intention to the exchange to give the delivery, exchange may mark me the delivery, may not mark me the delivery, but we should avoid trading. And since it is a compulsory delivery, customer client has to compulsorily take that delivery. We cannot say, oh, I'll pay the penalty and leave. That is not an option, in delivery based contracts. So either you roll over 5 trading days prior to the expiry into the next contract, or you square up the position. But in contracts that are cash settled, like crude oil and natural gas, there is no delivery. You can hold till last minute. Even if you are unable to square off, there is no penalty. It will be settled at a settlement rate.
Okay.
Then in options, since the futures are expiring 5 days prior to that, options expire 2 days prior to the tender period of the futures contract, which are deliverable one.
Okay.
And what happens in options? Your in the money contracts gets converted into the as a futures position. For example, in crude oil, you are holding 6,500 call buy. So once at expiry, your position will be converted into the futures on the day of, after expiry. So you will get a buy position in futures. And vis-a-vis, if you are holding a put buy, your position would be on the sell side. Whatever M2M is there, it gets debited, credited on a daily basis.
I think that was very insightful because we have a lot of beginners, especially in the commodity and forex space. So I think we might just do a session specifically on these expiries so we can explain that better.
Yeah, we can do anytime.
I think we have one last question. What is the minimum capital one should have to trade forex?
See, the margin for trading in USD INR comes around 1,500 to 2,000. So minimum is 1,500 to 2,000 rupees. You can need to at least keep 3,000 in your account so that you don't face any RMS calls if in case the prices in case of adverse movements. But yes, the margin is around 3 to 5% in USD INR. So one lot of USD INR just costs you that.
Okay. Yeah, and I think that is all the questions we have for today, Pranav. Thank you so much, viewers. As usual, I hope you all like the video. I request you all to like and share our content so that your friends, family. You should share it with anyone who could benefit from these sort of sessions. Make sure to subscribe so you don't lose out on any new updates. And thank you so much, Pranav. Thank you so much for a wonderful
Thank you,
session
everyone.
and
Thank you,
answering
Pranav.
all our questions.
Yeah, yeah. Thank you.